There has been some massive news about HIMS lately, and one of the biggest mistakes investors are making is mixing up visibility with maturity in the business landscape. Just because a company feels everywhere does not mean it is finished growing, and just because a stock has already gone up does not mean the opportunity is over. Some of the biggest long-term winners looked expensive and obvious very early in their real expansion phase. HIMS may be sitting in that kind of moment right now.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
If you're new here, my name is Mikhail, and over the last 4 years at X10 Day Trade, we have been building an AutoPilot software that allows pro traders to trade for you without you having to invite them into your house. Essentially, within minutes, you can fire up our software. It plugs into your interactive broker account. And the great thing is you never have to send money to us. Everything fires directly from your account. And with just $10,000, you can get started. I'm a big believer in the thesis that you should 80% in your long-term investments and 20% in some shorter-term ones. Now, don't spend months or years trying to figure out day trading and the markets itself. Even I know people that have been doing this for years and have not been able to get the returns we're getting automatically hands-off for you with our software. We aim for 8 to 15% returns every single month, and here are our results from 2022, here are our results from 2022 and 2023, and here are our results over the last month. We had 33 out of 35 winning trades. We only trade the US stock market because we're big believers that if you just do one thing and you do it really well, you will be good at it. It's the law of 10,000 hours, and we have clocked over well over 10,000 hours in developing the software and bringing it to you. We've got over 500 members now, so if you're looking to find out more about this and how you can trade in the markets every single day, hands off, without being glued to a screen, check the link below and book in a call, and I'll walk you through the entire process and see if it's a good fit for you. Without further ado, let's get stuck into the video. On the video today, I'm going to be looking at subscriber numbers in real context, and we'll be comparing HIMS to what early global platforms look like during their expansion. We will also be talking about why volatility and disagreement often show growth in progress and not decline. Let's start with the core misunderstanding. So people look at HIMS and say, look, it's everywhere. I see the ads, I see it popping up everywhere. You see creators talking about it and you see it on the news, you see the headlines that everything has come out recently, right? You hear the name pretty often. And for you, it could start to feel really familiar. And when something starts to feel familiar in the marketplace, the brain starts to assume it must already be mature. But if you're seeing this video, there's a very high chance that the algorithm has put this in front of you. And familiarity is not the same as saturation. Just because you've seen it a lot, it might be relative to your world and your experience, but it's not actually true to the actual world itself. Now, in 2024, HIMS reported about 2.2 million subscribers, and that sounds large until you zoom out. The US alone has more than 330 million people, and Europe has more than 750 million. So even if you look at adults, the percentage using HIMS is still very small compared to the total market. We are talking low single digits at most, and that is not late stage. This is early, and here's where framing really matters. If you compare HIMS to a small startup, it looks huge, but that is just the wrong lens to be looking at it. The better comparison is really looking at early expansion phase platforms. Like, think about the big dogs, Netflix, Amazon, Spotify. In their growth years, they had millions of users long before they came dominant. They were well known long before they were fully built out. Familiarity came first, and saturation will come much later. HIMS appears to be in that middle phase, very visible. We just looked at Super Bowl ads that came out from them as well, but it's not saturated. Many investors focus on the chart instead of the engine, the business behind the stock price, and all they do is watch price swings and they read strong opinions online. Now, they forget to ask what the business itself is doing. So what is happening under the surface? The company is still adding new categories. They're still expanding services. They're still improving margins, which simply means keeping more profit from each dollar earned. Now, if we're working on unit economics, which just means earning more from each customer over time, late stage companies mostly fine-tune. Early stage platforms build, scale. They're in a growth phase. Fine-tuning is more about squeezing efficiency from mature systems. Building is about adding new layers. We're talking about different products. We're going into different markets. And with all this growth, you're going to push on some edges. And HIMS is still adding layers. There is also a mental trap here. Once a company feels obvious, people assume future growth is already fully priced into the stock. I mean, if we look at what the stock price done when it hit an all-time high and it come back down, a lot of people are feeling like, oh, I've missed that now, because you can look in hindsight, it tells a different story when you don't have context on what the company is actually doing. But the markets do not perfectly price the future, and they mostly price what is clear right now. And right now, many people see HIMS as just hair, skin, and weight loss and telehealth, and they see a very narrow box. But platforms expand beyond their first category. They need to. They need to adapt to grow. The real power of a platform is not what it sells today. It is what it becomes the default place over time. So when something becomes the default, growth changes. People use it because it is trusted, because it is simple, and because it is already there. That shift doesn't happen overnight. And during that shift, the stock rarely moves in a straight line. We've seen this more recently with HIMS. Early platforms attract disagreement, and some investors see where it could go, and others focus only on what it is today or what's happened in the past. And that gap in vision creates volatility. But disagreement is not weakness, and often it means the story is still being written. So when everyone agrees, most of the upside is usually gone. And the strongest long-term compounders often look controversial right in the middle of their journey, and expansion feels noisy. There are headlines and there are pullbacks, and without patience, that noise really feels like failure. And with patience, it looks like just normal growth. The opportunity exists because most people struggle with that patience, and they want certainty. They want certainty in knowing what's going to happen, when it's going to happen. We look for this in so many areas of life, and especially in investments. But early growth rarely feels certain. It feels unstable, and that instability pushes people out too soon. So HIMS feels visible. It feels large. It feels established. But visibility does not equal maturity. The real question is not how familiar the brand seems. The real question is how much space is left for expansion. So as we move deeper into 2026, ask yourself this. Are you judging HIMS by the noise of the stock price, or by how early the business may still be in this expansion cycle?